If you want to know when will Tesla stock get its big breakout, what will make that happen, and what is likely to happen before that, then stay tuned and see if you agree with this analysis. I've asked two of the people whose work I consider highly to come on with me and explain their forecast. With a career in tech, M&A, investment banking, Justin has spent the last 10 years in startups in Silicon Valley. As a Tesla shareholder since 2013, he's known on X for Tesla options trading and sharing both fundamental and technical outlooks and catalysts for Tesla. We'll also be joined by Xander Sky, my fellow Cyberbulls, known as the Options Bull. His results over the last 6 months speaks for themselves. He's got his finger on the pulse of Tesla stock. Welcome, both of you. Appreciate you guys joining me.
Thank you.
Thanks, Herbert. Glad to be here.
Thank you for this, because my audience primarily are the long-term Tesla investors. And the thing I've learned as one who's a Tesla investor, who really thinks just long-term, is that because Tesla is very volatile, considered to be one of the most volatile stocks, I think it's important for people to just understand the technicals, understand how you guys specifically can teach us how you're looking at the upcoming events, and how do you guys think about whether or not the stock's going to head, trending up or trending down, or if it's finally going to break through and that happens. So let's go through that. We've got quite a bit of slides we can go through talking about 2025. But before we go do that, Justin, set the stage. We're here in October. Tell us, what are these, you call them binary events, that are about to happen in the next several months?
Yeah, so we just had one this week, right, with the PD report, and we then have the robotaxi event next week, and then earnings reports. So with all these binary events, the reason why I call them binary events, obviously, is because we don't know whether it's going to go up or down afterwards. And so when you're thinking about positioning, or when you're thinking about certain trades you're trying to take on, you really want to think a lot about your allocation and your time frame, and maybe what some of the indicators might be saying heading into any of these events that would sway you a little bit more towards one side or the other, depending on kind of the setup. So I find indicators to be really helpful, not so much for binary events like these, but just when you're thinking about long-term positioning, when you're thinking about hedging, when you're thinking about levering up or even levering down. It's overall, it's very helpful to get a sense of momentum, trends, and when trends break to the downside, right? So
okay,
you don't want to go all in when the trend is switching to the downside right away.
So go ahead, tell us what's going to happen. How is your mind thinking as you go through the next several months?
Yeah. So one thing I don't do is I don't really care too much about the short-term price reaction on the day-to-day. As we all know, especially this whole year to date, it's been a very volatile stock. We had an amazing breakout since the last time we talked. I think we talked maybe in June, and going into July, it was incredible. And then, ran into corrections with the indexes, and then the Japanese yen carry trade and all that kind of stuff. Coming out of that, now on a go-forward basis, we just have election seasonality to get over. And so elections take place the first week of November. And then October tends to be seasonally weak for the indexes. So another thing to keep in mind. And obviously, we have two binary events coming up, the robotaxi event and earnings reports. Thereafter, especially after early November, folks like Mark Newton really says that Tesla should have a really decent shot at having a really good breakout. And we'll talk about some of the key levels that I'm looking at, and also some of the key indicators to help you kind of manage that uptrend.
Okay, good. Well, let's get there. Let's tell me right now, what is the number? Mark Newton says, I think 271. If it hits past 271 and it breaks through a sustained level, then it's off to the races for Tesla. What do you think? What's your number, Xander?
I'm looking at what we just experienced, which is the 265 area, which is a higher, which is a lower high. So that's kind of why when I saw hesitation there and the steam come out of the wave there, I sold shares in my trading account. And last week on Cyberbulls, I talked about how it would be really healthy to pull back to the 240s. I said 250, then it would be good 245, 240. And we just wicked down below, but we ended up closing the day at 240 yesterday, which was good. And then today we had a nice recovery on Friday of over 250. So The number that I'm looking for is I want to get back up there now. Now that we came down to the downside, we trapped some bears who thought it was all going to crater. And we need to go retest that 265 and 270. Once we break that, I think there's just clear runway all the way to 300. But when there's uncertainty, and Justin kind of really touched on that, I don't throw any any short-term darts, right? And I think Justin will back me up on that. It's really about buying shares, buying back those shares. So that's what I did. Lowered my cost basis on all the shares that I sold. I already bought them all back yesterday, and then just throwing these kind of the super long darts. If you're trying to capture, I am not greedy yet. I'm waiting for what that big breakout is, which I think Justin's going to talk about, where the company is no longer viewed as a car company, and it's a technology company, and the S&P confirms that. And once that happens, that's really that moonshot that we're looking for.
Okay, perfect. And then so Justin, when we last spoke, you were talking about the great repricing of Tesla, and what is your thinking at this point? So things have obviously evolved. Has that strengthen your belief that it will happen, and what will it take to finally get there?
Yeah, so the great repricing is predicated on the fact that discount rates are essentially a reflection of confidence levels, right? When you're modeling out a business, for example, autonomy or humanoid robots, we don't really have an exact, high confidence interval with regards to our, multi-year outlook. So every analyst and every investor is going to apply a really high discount rate. Now, what's going to change that discount rate? More visibility and a sense of inevitability of the actual launch, because these are new technologies, that don't really have a comparable in today's world. So, the challenge really is trying to decide between, do you take on the risk of being too early, or do you wait and be a little bit late to the party once things are more clear? So obviously, the challenge is that Elon has been saying a lot about robotaxis back since 2019, Autonomy Day. And so there's a very high discount rate being applied to a lot of things that he says, right? Because it's really hard to take to heart all of his timelines and projections, because, these are really tough technologies to crack, and it takes time. And his projections have not been always as accurate as he, originally intended. So that's kind of the natural, distinction that everyone has to make is, do I, take the risk of being too early and just wait it out? But the risk is that, we kind of stay in this range bound type of trading like we've seen over the past 3 years. Or, do you wait for things to be clear and be a little bit late to the party, even if that means buying above 300 or 350 or whatever? So, I think everyone has to make that decision for themselves. And I think, once the narrative starts to become, skewed towards it's inevitable, like for example, with autonomy, and let's say version 13 really starts to kill it, and we start to see miles per critical disengagement stretch to thousands of miles or even up to 10,000 miles, like Elon said today. If that happens in 6 months, then all of a sudden everyone's going to say, look, this is coming. And, we can start to pencil it in with higher degree of certainty. I think people like RBC still have robotaxis operating out in 2040, so it's kind of ridiculous. And I think at some point that's going to change. And so that's kind of what I dub the great repricing of Tesla, because that will break financial models.
Okay. And so I think so you kind of like said that that there will be a great repricing, and you can kind of wait until you see more. Version 13 could be later, but how are you feeling about this? So you're seeing the stock in the range bound. You've got a list here. You got some slides here to talk about 2025 and some of the tailwinds that's really going to come to help push this over. What's your sense? What's your guess? What's your bet? Yeah.
Yeah, so I'm definitely bullish. I think that obviously the last 3 months since the last time we talked, there has been a little bit of stalling in terms of FSD's progress. 12.4, for example, is a big example of that, where it kind of flopped and never really kind of made it to the customers. So 12.5 obviously did really well. We're going to see with continued progress, and I think the big turning point really was when Tesla AI started dropping their product roadmap and their anticipated things that they're working towards. So I think we're going to start to see a pivot in terms of their. I think what that says is that their calibration, their internal timelines are becoming more and more accurate. They were able to knock out everything they said they were going to do in September, which was really impressive. So I want to see more data and anecdotes like that show that they have visibility into the future. And as the future comes about, those predictions are on time and accurate such that you can give more credibility to future projections. Um, I think ultimately 2025 will be about, can Elon come through with a lot of this stuff? And, everyone's tracking the data now with regards to miles per intervention. And so there's a big spotlight on it. I personally think he'll be able to do it. I think that there's going to be enough catalysts quarter over quarter to propel the stock higher. And I think within the next year, the inevitability factor will come true. I think FSD will get so good that it'll be literally a matter of time before it's pilot launched at the first handful of markets. I would even say by the end of next year is on the table. Obviously, we'll get more visibility, at 10/10 next week and thereafter, especially with version 13. If it's another step change like we saw from version 12 to from version 11 to version 12, then my goodness, I think we have a good shot. But ultimately, it's going to come down to Elon and co, right? So
Okay, so if those things do happen, you're talking fundamentals, honestly. You're talking product and features. If they didn't happen, what's going to happen to the stock, and when will it happen?
I think there's going to be key levels to watch that'll, because we can do all of our analysis and have our guesstimates, but the market, which is the collective wisdom of every single investor globally, is going to really be the thing to watch, right? So price action. So that's going to be kind of one of my tells. The second tell is going to be, coming out of 10/10, when does production start of the Cybercab? Because that to me says autonomy will be solved, or they believe autonomy will be solved by the time production begins. Because otherwise, it doesn't make sense to produce a car without a steering wheel if it can't drive itself. That's my thought process. So I use
let's
that as
assume
a
it's
gauge or a signal.
2026. What if they announce that the production of Cybercab will be 2026? What does that mean?
Early or
to
late?
you?
Early or late?
Early.
Early is good. Early is okay.
Okay.
I think that that would be okay. What I would like to, you probably saw Adam Jones, Jonas. Is it Adam Jonas? Yeah.
Jonas.
His latest note, about supervised FSD, and he believes that there's probably going to be a dual approach that Tesla's going to take: the full-on autonomous version Cybercab, and then the supervised FSD-driven, ride-hailing. So basically using humans. We'll see if they end up taking that approach. I think Elon was pretty straightforward when I asked him the question and at the shareholder meeting back in 2022 that they're focused on full autonomy. They're not looking to do any kind of hybrid thing. So we'll see, but I'm not sure.
The first version of Cybertruck FSD just blew me away. I'm actually teaching myself a little editing to stitch together the footage from the truck of an unprotected left turn. It was flawless, door to door, and even tried to park itself, but there was a car, so I guess it didn't want to reverse. It can't reverse yet, so it kind of just stopped there, and then I pulled it further in. But I think that like the Cybercab late comment, I don't think that makes any sense at all, because why would they, as Jeff says, why would they forecast 2.5 or 50% increase, so 2.7 of capacity, and then also why would they Osborne the Model 3, which is so close in price, to this lower cost vehicle, whether it's Cybercab or as we discussed on Cyberbulls this morning, whether it would be a compact that's lower priced. So I think to the question of like when do we get the rip, it really comes down to something that Wall Street can sink their teeth into. It has to be modelable. You need some kind of numbers, you need some kind of projections, and then it really just comes down to, do you trust management? And I think like that AI roadmap was just such a genius move to showcase that we have internal targets, we are meeting them. Here's something that you can hold us accountable to, and then that starts building confidence. We've broken the multi-year trend line. That is a big deal. From technical perspectives, we broke out of it. It went up to 270, came back down. Now you're established a higher low. We'll see if we get continued downside, right? If the 10-10 event is a flop, we will retrace to 200 so fast it's because you have a lot of short-term gambling happening here. So that's kind of why I say, like, with my trading portfolio, that has really helped me not to deploy the long-term funds of buying these leaps, because I got burned on leaps from the 2021 days. So having this kind of seeing both the short-term, like golf, short-term game helps the long-term drives.
Okay, good. I think do you guys have any final comments on what you're expecting in the next 3 months to round up 2024?
I think we need more data.
Okay.
I think we need to see what are they going to announce on 10-10. Once we see exactly what that is, like if you look at the options market, if you look at the chain right now, selling covered calls for 300 strike for next week, this morning was paying like a dollar or whatever it was. I don't even remember. I did so many trades, but that's a lot, right? To be $50 out of the money and to get that much premium, meaning you could sell like a 350 strike or something like that for 10 cents, which is super. Do you think we rocket to 300, 350? Probably not, right? And you could look at the percentages there, but because the market doesn't know, the premiums are so juicy. So there's a lot at stake here, and then we could also look at the downside. And kind of see which way is the market leaning. Where's that market bias? Do you do that kind of thinking, Justin?
What type? Sorry.
Like looking at the bias of put calls.
No, not so much. I don't. I fundamentally view these binary events as more or less 50-50, or maybe if we have a little bit of an edge, 60-40. I don't really try to bet either way. But I think, if I'm thinking about going into the end of the year, first and foremost, like I said, we have obviously 10-10, and then we have earnings, and then we have elections. So there's a few different scenarios that can be played out, right? Just from a combination standpoint. And so we could sell off after 10-10, we could sell off after earnings, and then we can end up having Kamala win, which would sell off even more, for all we know. Or we could have a really, optimistic output of all of these, events. Or maybe there's some sort of mix in between. So I think overall, my viewpoint is turbulence until elections. And then after elections, all of the seasonality for the markets and for all of the statistics coming out of, a Fed easing cycle starting in the first 3 months, 6 months, 12 months performance of the S&P, and more importantly of consumer discretionary, which is, what Tesla's part of. Consumer discretionary outperforms S&P 500 over the first 6 months of a Fed cutting cycle. And so all of the economic reports that have been coming out really good. Mm-hmm. And so there's, very little credence to the hard landing viewpoint now. And so we're going into Fed easing cycle with a soft landing. That is very good for Tesla. And not to mention what happened this week, or I would say this last 2 weeks, was China, sort of opening up a bazooka of stimulus. That is a fantastic tailwind for Tesla because the Chinese consumer is now much better off and there's a positive wealth effect. So there's a lot of things to look forward to, especially if Trump wins. But of course, the next 3 weeks or I would say the next 5 weeks is going to be quite turbulent, and you should just expect that, and that's fine.
Okay, good.
One more thing. I think Justin said soft landing, and I believe Tom Lee said that they're pricing in like a no landing scenario, that it just goes. And historically speaking, October, as Justin said, it's especially the way that election year and the way we started the first day of October. That's super volatile. But once you get to elections, the rest of the year should be, as long as the market likes what they see, it historically has been 100% of the time after the Fed cuts, it's 100% of the time up. Not some crazy numbers, but that's what the data shows. Every time there's been similarities with these variables that go into this data that Tom Lee pulls together. And if you're not familiar with Tom Lee, Fund Strat is something you should take a look at. But yeah, that was something I was going to say. I'm watching the yields, the inversion and the uninversion of the 2 and the 10-year yields. That has kind of, recession risk is still on the table. The landings, wars, all of these things that are happening in the world is why I'm super ultra cautious on the trading portfolio. And I keep returning to cash. As soon as it goes green, no greed at all. Just take it and then make another trade. So no overnight risk or no weekend risk, as much as I can. But sometimes I do look forward to this, to this moment where the data says that we're supposed to be bullish, but I keep going back to the contrarian view of like, well, how much money can I lose instead of how much money can I gain? And even for the long-term deployment.
Okay. Fantastic. Both of you, appreciate this so far. So, this is great. You're saying that in the next several months, there's this catalyst event. There's events that are happening, could go either way, but it's going to be pretty muddy. We don't know yet what's going to happen. But then you're saying it's going to start looking pretty good for 2025. So I want to quickly pause here for a second and explain the reason why I asked both of you guys to come on this show is because I've been following you. I know you guys quite well. And you guys have both of you, your track record in the last 6 months specifically, it's just been amazing. I need to understand how you're doing this. So Xander, for example, near the end of this thing, we'll walk through a little bit your credentials. Why should people listen to you? And same with you, Justin. Of course, your background already speaks well for itself with the investment banking, and you've been doing this for quite a while. So walk us through now a little bit of 2025. That you gave me a presentation here. Share with me tell folks why this is important.
Yeah. So before jumping into some of the charts and the price targets that I'm looking at for 2025, I want to set the scene a little bit with some of the tailwinds for Tesla. So first and foremost, like we chatted about just a second ago, right? Fed easing cycle has just started, soft landing or even no landing. And this is a direct benefit to the auto industry and the S&P 500. And consumer discretionary, which Tesla is part of, outperforms the S&P 500 over the following 6 months. So we're talking about going into March, basically, right? And so if you combine that with the election seasonality, you start to think, okay, well, it sounds like November into March could be a really good time period from a general tailwind perspective. Now, as we look forward into the year, what should we expect, right? Well, the third bullet point here, FSD and autonomy is inching closer to being solved. We're going to see version 13 that's going to be coming out actually this month. And we should see regulatory approvals become imminent, right? China, EU, and even local ones. Furthermore, we also have the Cortex supercomputer going online, which should accelerate the progress. So if there's any kind of step change, like we saw from version 11 into version 12, going into version 13, this should be a tremendous, breakthrough for the team, hopefully. Next, we also have FSD licensing announcement, which should be imminent as well. If we're looking into 2025. And like we saw with the NACS adopters, for the supercharging network, we saw Tesla really spike afterwards because there's this domino effect that happened with all these different OEMs plugging into Tesla. And for whatever reason, the stock market really liked it. Now, we could certainly see the same thing for FSD licensing, in my opinion, because from a game theory perspective, it makes a lot of sense to do so. And then next, of course, we have the AI theme in general, which is focused on enhancing capability and growth and monetization. Obviously, Tesla will be the emerging leader for real-world AI, and I think that'll be more and more apparent to the rest of the market as we go into 2025. next, we have autonomy and robotics. When you model these out, these are going to multiply earnings. This is not linear growth. This is geometric growth. So what that means is that there's going to be significant compounding, likely faster than most analysts are going to expect. And the reason for this is because when you think about, for example, autonomy, you're like, okay, well, let's say they launch 5 markets in 2025, right? Test markets, pretty small. And then in 2026, they grow by 100%, right? So they go to 10 markets in 2026. Then they grow by another 100% in 2027 to 20 markets. Well, here's the reality. The reality is that when autonomy is solved, this is solved at scale. And so there's going to be not only more and more markets that are going to go online, but also within each market, there are going to be more and more vehicles that are going to go online. And those utilization rates are also going to grow over time. So all of these things, combined, at least for autonomy only, this is a step change repricing. This is what breaks financial models. And this is why we'll probably see a similar type of breakout to what we saw with NVIDIA and Meta after their bear market, multi-year downtrend line was broken. Ours was just broken a couple months ago, and we've retested it already, and now we're ready to go. So again, with all of these backdrop, right, we have really strong, sort of tailwinds going into 2025.
I love this. You make me more bullish.
I'd say, when you drop from 400 to 100, retest 140, test 200. Once we broke 200, it really and stabilized there and went sideways for such a long time. Obviously, I don't know what black swan could come and cause something similar. We really have the interest rates coming down. That Fed pivot was for me the time to start dabbling with options and start throwing some long-term darts. But these tailwinds is exactly why, and watching out for some of them not coming true is important. So great list, Justin.
I guess my thinking was, okay, people are now starting to hear and kind of listen to Tesla saying, hey, we've got autonomy, we've got robots. But investors are still kind of ignoring it because, show me.
No growth
now
rate.
Yours,
that's why.
What's that?
No growth rate, right?
No. It's like a future. It's way, way in the future. But what you're saying here is that that as these things take off over the 2025, then that's when you believe that people will start to value this geometric growth that's a possibility in the future. They'll start valuing it today, like in 2025.
Yeah, well, imminence is the key thing, right? When it becomes imminent. So all of these, for example, humanoid robots and autonomy, the way I like to think about it is in terms of thresholds. There needs to be a certain threshold that needs to break in order for it to become imminent, right? So for example, Optimus, I can put together some, things and do some cool tasks, right? But it's not beyond a certain threshold wherein the market can start to get excited and say, hey, look, this is coming. We can start to pencil it in because every single analyst, every single investor is going to be penciling in the next 5-10 years of growth. And the only thing that's, again, from my perspective, that is hindering all of this is a very large discount rate being applied because, frankly, they don't know. They don't know if it's going to be ready in 2026 or not. So how can you say with any confidence?
Okay. Are you willing to tell me what that threshold is?
Well, for me, for autonomy, it'll be the launch of its first pilot program.
Okay.
What I mean by that is
the day of or the announcement, like when they actually start getting money, just the announcement and then the belief that it's going to actually happen, right?
The announcement.
Okay.
Yep, exactly. Because the announcement and the timeline is going to be really important because now we have guidance, right? We can have, they can start to say, hey, look, we're launching in Austin, Los Angeles, and Miami this year, or I should say next year. But then we're scaling to, blah, 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 blah in 2026 and so on. So all of those things are going to be really helpful. Yeah.
Okay. And then what about the bot? Customers?
For the bot, it's going to be, so I know from what I know from the last earnings report, right? Elon said that they're going to have thousands of bots in Tesla factories by the end of next year. And then version 2, Optimus, should go for sale in 2026.
Version 3. Oh, yeah.
Version 3. Okay. Whatever the name is.
No. Yeah, okay. Yeah. There's
I
a
got
third
version 2 from
generation.
the transcript, and so
I,
maybe,
I think you're
yeah,
correct
maybe it's
because
good.
there's a third generation that's coming out now, and then version 1 is what's actually sold, and then version 2 is what's actually sold. Yeah. Okay.
Okay,
Um,
got it.
Understood. Understood what you're saying now. Some people are saying though that yeah, those are Elon timelines. Yeah, he says these things, but that's just to get the employees to try to hit a target. Nah, the likelihood that's going to happen is not true. So there's has to be another threshold other than Elon saying it, right?
Yeah, exactly. It has to be, yeah, there has to be tangible results. Whether it's an optimist being fully, capable of doing a variety of different tasks and interacting with people very normally, all those kind of things are going to need to come about. And, we are talking about 12, 18, 24-month timelines for these. The big bet is whether in 2025 we start to see some real traction, real catalysts start to come through.
That's enough. Okay, let's go through your list here.
So this is just kind of illustrating the fact that on a quarterly basis, there's enough catalysts, right, with some meat on them
Love
that
it.
would be able to help fuel what I believe is coming, which is in the great repricing, right? So we don't know exactly which catalyst is going to be the catalyst. Just like for example, the supercharger, right,
Yeah.
adoption thing was one that really blew up the stock, and also Hertz, putting in an order. Those are all silly things, but those were the catalysts that worked. Well, there's going to be several in 2025. We don't know which one or if any, but I would say that these give some good tailwinds again on a fundamental level to help push this stock forward and to help investors start to model out some of these business lines, with a higher degree of confidence.
I'm just looking through
And so we
this.
don't need to go through all of them.
Right.
If you want to skip through.
I don't want to skip through. Why would I skip through this? But I'm not going to read through all of them. I agree with you. I'm just trying to pick and choose. But I love that you put this together. I was a milestones guy. It's been a while since I've done it myself. I need to start creating these things. But trying to see which one I think, like you're saying, could actually be the trigger that changes. Because you know how things just build up, nothing happens, and all of a sudden it's just one more little thing, and then all of a sudden people understand, oh my God, what am I missing? FSD in China and Europe, that's FSD going global. If at that time FSD 13 is so good, if it truly is a step change improvement, then that could already, just that alone, be this recognition by investors like, okay, FSD is really good. And then if they can show that it's actually a demand driver of just cars, that alone could be enough to say it's big. But it's got to go. I think the end of the day, it's actually, I'll revise that. It needs to be a partnership, which I don't see here. I know you talked about it, but you didn't write it down here. It's partnerships that blow people's minds away because they realize it's not just Tesla is saying it's true. It's actually large corporations that are betting on it. And then the market seems to be bigger for them because it's like every company's going to invest in you now. So
I want to push back on that a little bit. I think that in my mind, it just all comes down to trust. But for me, it's not trust of Elon's prognostications. It's trust of the vehicle. So Cybertruck, first version of FSD, it was like my second drive. Perfect. I did one in the nighttime when I first got it, and then daytime. Perfect drive. Whoa. Okay, I'm blown away. My guard is not going to come down. But as users, right? And we have how many Teslas, how many users of FSD. As we gain confidence, then we start gaining confidence in the technology. Then the management who's making timeline prognostications, they're hitting all their milestones and they're delivering. Then we start looking at Elon differently. We know that he will set impossible goals to, as you mentioned, to drive results. But this just all comes down to the proof is in the pudding. If it's so good, it doesn't matter if it's a big corporation that partners. I think Jeff said, Hertz over-ordered, but then I read a comment that it was like, oh no, Hertz didn't think it through all the way because of what they were like. I just think these companies are going to make bets as well. But that to me isn't what I want. I want to see FSD solve, because once we have this confidence in the tech, then we can draw the conclusion of, well, What if you remove the wheels and you put this tech into a robot? What if you put it into this type of robot or that type of robot? And then these robots that are on our streets currently are cars. We all accept that it's a car. What happens when you start actually having Optimus walking down the street? Like our brains aren't ready to handle that. So I think it all, for me, just comes back down to this FSD being solved.
Progress. And that's what we've got here. Version 14. Okay, so let's move on. Technical outlooks.
Yeah, so we'll talk about it three big chunks. First, we're going to set the scene with Mark Newton's outlook. I think that helps to frame kind of what's to come in terms of like price action and price targets. Then I want to just really quickly touch on the monthly MACD cross, which is a really big deal, and I'll talk about why. And then I want to take a second to look at what the previous breakout when the last time the monthly MACD has come about. So we'll chat about all that kind of stuff. So first and foremost, I think viewers can kind of pause and read, Mark Newton's notes here. The last time that you guys spoke, right, he shared a lot of the similar information, but the key things I just want to call out are some of the price targets and thresholds that he's looking at. So the first one is going to be 271, right? That was the recent high from July. And as soon as that breaks, he believes that 295 is on the table. After 295 is going to be all-time highs at 414, 415, whatever it is. He has price targets thereafter at 505, right?
Yeah. If it breaks 414, he said it's going to boom.
Yep. So one interesting thing to keep in mind is also above 270, there's also this concept of volume profile. And what it essentially illustrates are these volume shelves and then these zones of low volume profile. So when it's above a shelf and it starts to go into this increasingly kind of like reduced volume zone, that's when price can really cut through bigger than you think. Or, and a lot of times whenever you see these exaggerated moves, it's because we're usually bouncing in between volume shelves. So after 270, that volume shelf starts to drop off dramatically. So that gives a lot of credence too. And so that's why I'm way more afraid of upside risk than downside risk at this point.
Okay, so explain what you just meant there. What do you mean by you're more afraid of upside risk?
Because of how...
Explain what that means. Like you're afraid that you're going to miss the jump as opposed to losing money, which is the opposite of what...
It's going to break fast.
Okay, so
that's what I mean. Is that it's hard to get in.
I can sharpen it for you. So I smiled because I love this. This is exactly the same thing that we had at 200. So once we broke out of 200, if you go on Webull, you can look at like cost distribution, or I forget what it's called, but it's a profited shares at market close, and it'll say how many shares that what he's talking about. It's a positions cost distribution. So what that does is, like, currently we're at a 227 average cost, closing price of 250.08, and there's profited shares is 79.12. Well, what happens is when you get to 270, most of the short-term, medium-term buyers that are gambling on the money, to make some money, they're going to get exhausted. So once the sellers get exhausted, now you have this gamma of buying pressure that just continues to come in, and that's FOMO. You don't know where the ceiling is. So we know that 300 is going to be one. And so what he's saying is that once that 300 breaks, if you go back to previous historicals, there's going to be another, another technical level where someone's going to exhale and say, I broke even. Whew, I hate this company. This isn't for me. I'm getting out. And so every one of these like super, previous higher lows, now we're going to have the opposite. We're going to have a lower high. Now it becomes climbing it.
Yeah. That's why the all-time high is important, right? Because there's a bunch of people bought it all-time high and then it fell and now they're like so pissed and they're just waiting. And once it hits it, I'm out of here. Get my money back. I'm out.
Yes, but it's not just all about all-time high. So for me, it's really about, like, I draw these
at every level.
Support line. Yeah. Yes, at every level, and that's where you can expect hesitation. Yep.
Okay, understood. Okay, I get you now. So that's interesting that you said that, Justin, that you for the way you see Tesla, you're actually are expecting some sort of great repricing, and you're seeing at by the time it hits 271 some point, and maybe the new year, maybe it'll start. Something will make it go. Okay.
Yeah.
Yeah.
Yep. And the nice thing is that those two, the technicals and the fundamentals really line up very nicely. And we are in a Fed easing cycle. So there's, again, a lot of tailwinds going into it. So the odds are fairly decent. And so this is just a visualization of Mark Newton's price targets at 505 and 720, just to kind of give some general sense here. And not to mention, you have this fib extension level at the 1.618 level, which is at about $600. So no matter how you slice it, there's a lot of upside here. And so the real idea is just
So
to say, okay,
I don't know what that means. 1.618 golden fib extension. What is this? I don't know what that word means.
So this is just, it's called a Fibonacci retracement tool. And all this looks at are these general levels that price tends to move towards on a pullback or on a push higher. So, this is just looking at the extension. So it's looking at the all-time highs from 2021, pulling down all the way to the bottom of 2022. And then it shows these kind of key levels, and the extension level towards the upside is another kind of key level as well. So I think by and large, the way I think about it is, look, above 270, we start to enter a low volume profile zone all the way up to all-time highs. We have key levels at 300. We have key levels at 414, and then we have the upside potential up to 505. So I'm looking at 500 by the end of next year.
500 by the end of next year.
Yeah. So and if you're looking at it from a technical perspective, you're thinking, okay, well, this is probably going to operate in waves, which I get into I think in the next slide. But there's going to be some key levels that we'll talk about. And first I'll talk about the monthly MACD. This is obviously a big one. So this is the big tell that you combine with the multi-year downtrend line that we just broke through, right? Again, it's been rejected probably a dozen times over the past three years, right? But the MACD cross is a big one because it helps to unlock this type of movement upwards. And so the last time it happened was in late 2019. That unlocked a 2-year breakout. And so this is kind of, this is something that a lot of people are looking at. And this screenshot is actually taken from September. The updated view is actually we're a lot higher now on the MACD. So this is all really good stuff. And this is a longer time frame, right? Each candle is 1 month. So there's a lot of time and data crammed into this. And, as we all know, longer time frames carry a lot more weight. So that's why the monthly MACD cross, we haven't seen this in years.
So, okay, this line in the middle, and then you got red and green. The green means that's above that line, and this is below. What is this line in the middle? What is this line?
Well, by and large, the way that you can think about it is that, there's something called a bearish crossover when it's pulling downwards and then, essentially going from green to red, like we saw basically at the top of 2022 or 2021, sorry. And then we have the bullish crossover when it turns from red to green.
Which is
and so these basically look at two different exponential moving averages and then the distance between the two. And all it shows is, a change in momentum or a change in trend.
Okay. And what does MACD stand for?
I'd have to look it up. I don't know.
It stands for moving average, conversions, and divergence. Right. So
moving average, convergence, divergence.
So think about it. Think about it like this. I use the moving averages daily. That's I look at the 200s, the 50s. Certain sub traders use the 9 and the 21. They're just literally a mathematical moving average. Depending on the time scale that you're looking at, whether it's 1 minute, 5 minute, a day, a month, a week. So in this case, with it being so zoomed out to 1 month, what it's showing is just general sentiment. And that's how you could use this tool to kind of gauge how, are people feeling bullish or not, or bearish?
Yeah.
And then, by the way,
people were very bearish, and then now maybe.
But you see how it's smaller? You see how the
Yeah,
first
it got
red
smaller.
wave,
Uh-huh.
yes,
Uh-huh.
the first red wave was big and
Yeah.
wide and tall.
And
The
same with
second
this
wave is
one.
smaller. And
Yeah.
then so I think about all of these price movements in terms of waves, whether volume comes in.
Yeah.
And then with the fib tool, it's all fancy. 1.68. I'll tell you from I'm like a piano player who doesn't know anything.
Yeah.
I'm self-taught. I
Yeah.
just look at it like this. If everyone is using this, everyone, but when I say everyone, I mean like traders or hedge funds or algos. If everyone knows that between this level and this level, this is where institutional buying occurs, then it's like a self-fulfilling prophecy. That's why a lot of people hate the technicals, because it's like, oh, it's
astrology, but
astrology,
if everybody believes it and they invest
That's
because
right.
of this.
exactly. But
Gotcha.
there's a lot of psychology that goes into it. This is a mathematical representation of the psychology.
Okay. So your point here, Justin, is simply that take a look at this. We've hit the cross and we're about to maybe get into the positives now. Yeah.
Yeah. It's a signal of a new kind of era, if you will.
Okay.
Okay. It's very
it's only tiny. Do you need to have, I don't know, 3 more months, 6 more months before you know
follow
for
through?
sure?
Yeah, definitely. Yeah, follow through.
Follow through.
Price will dictate that. And so, we want to see that continue moving upwards.
All right. If it's legit.
Yeah. Okay. So if it's legit, right? Now we're talking about 505 is on the table. Well, there's some key levels, right? There's key levels are 300, 400, 500. Pretty easy, right? There's going to be a low volume profile zone above 270. So we know that as soon as 270 breaks, we're probably going to go to 300 pretty soon.
Okay. Let me understand what you just said.
We don't know exactly when it'll happen.
When it hits 270, what do you mean by low volume? That there's just not enough people that are going to be selling it, that you can now, just the next level is going to be 300. It's just much easier for it to go up now. Is that what you're saying?
So you can see on the right side of that chart, there's those horizontal yellow and blue bars.
Yes.
So this kind of indicates how much trading volume has taken place at particular price ranges. Okay. And so what it's saying is that, when you're in a kind of like a high volume area, so you notice that, there's a lot of chop. That's where you should expect chop, resistance, support, whatever it is, depending on where you are in the chart.
Okay.
But when you go above it, now things start to get a little wonky. Yeah, because look how it drops off, right? Drops off a lot as you go higher. So that's where moves can become more exaggerated. That's what I find, and that's what everyone else expects. Yeah.
Understood. Okay, understood. All right.
Yeah. So, overall, what I'm trying to say is that there's a long way up. There's about 100 points on the table, more or less, right, up to 505. And so, if this operates in waves, I'll get into why on the next slide. But these key price levels are going to be the areas of some initial rejection, some consolidation before moving higher. And so, when you combine that with the fundamental catalyst, and you think, okay, well, let's talk about what should we expect this coming quarter, right?
Yeah.
And then not to mention, there's also seasonality, which I'll get into in the later slides, that can help, add a little bit more fidelity into, what may or may not happen. So again, I try to triangulate between a lot of these different data sources and then combine that with what other traders or investors, are looking for in the future as well. Like Mark Newton, for example, is fantastic. But we can go into the next slide.
Is it fair to say that if the price for whatever reason stays below 270, then even if these catalysts that you outlined in 2025 happen, it's still much less likely that it's going to break through. But if the price is over 270 and then these catalysts happen, then it's actually a lot easier to keep going up higher than we expect?
Yeah, because if we're breaking key levels, momentum starts to kick in. There's a lot of people who look at price levels that are, what else is coming up after we break this level and then this level. So, it's not to say that it goes in a straight line.
No, yeah.
It operates in waves and there's momentum to it. And, these are all kind of, I'm trying to illustrate the context around, some of the expected price action. And so when you look at 2019 and 2022's breakout, right, because you're thinking, well, what could it look like? This might be one comparable, and this helps to show that this also operated in different waves. And these waves are pretty violent on the way up. And I'm not saying that, we're going to see the same thing in 2025, but, I think what this says is that we should expect it to happen in waves. And some of the pullbacks can be pretty harsh. So it's not going to be a straight line up, even if we're right. And so this is where indicators really come into play that help to identify momentum, reversals, changes in trends, or even key levels to stop loss, right? If you're putting on a new position. I think all those things are going to be super important as we look into 2025.
So
And
are
on the
we
next slide,
here
it
in
actually shows the inverse.
2019? Do you think we're like right around
Yeah,
here compared to that time when it
exactly.
just turned
That was
green? Although it was,
exactly.
obviously this is exponential, so I don't, or it's hard to see if it was really low or down here, but now we're here. So could it be slow growth up and then there's a pop over
It
months?
looks little, but if you guys remember 2019 going to 2020 before COVID, I mean,
Yeah.
the thing was, as you can see, I mean, that was a 200% rally
I mean, like
within
from 20
4 or 5
bucks to
months.
$80 is pretty, it's pretty
Yeah.
huge. Yeah. 20,
So,
$60 is huge.
I'll be the party pooper bear, devil's advocate. Really important to remember during that time, during 2020,
Yeah.
the
Money was
wave was
flowing.
caused. Yeah, money printing, money was flowing. So
Mhm.
it really just comes down to this isn't you know how Tesla always gets called a meme stonk.
Mhm.
Like that is the like once that narrative is gone and now we're focused on the technology. S&P recognize it that this is the real deal. You could see it, you could test it, your friends are talking about it. That really is what is a possibility, but they have to deliver, right? They have to deliver a product because as we said, depending on what's happening, it really is a data driven decision for a fund manager to decide to invest, or mutual funds might have to once that S&P inclusion, not S&P inclusion, but S&P reclassification occurs. So I just think that we don't want to get too bullish, and for the audience, I definitely don't want to make it sound like uh, it's going to the moon, right? We're looking and analyzing what is the most likely possibility and what probability is that's the question I have for Justin is what probability do you assign to this playing out? You said 500 end of 2025. Was that correct? Did I hear correctly? What
Yeah.
probability do you assign to that?
My probability, that's literally a thumb in the air. I mean, 80%, 60%, there's no rationale to, distinguish between either one. I think
Gotcha.
the odds are good. And I think if you're going to be thinking about when do we, go back to all-time highs, basically with, again, the indexes are well above all-time highs, where
Mm-hmm.
compared to where it was last time that, Tesla had peaked out. So, we're very far behind. And
Agreed.
so I don't think anyone here is saying we're going to the moon. What I'm saying is that if we look at 2019 and 2022, it operated in similar kind of wave movements higher with very violent and turbulent kind of periods in between these waves. And so when I'm thinking about 2025 and I'm thinking, well, we have a good shot at going to all-time highs. And if we go to all-time highs, we're going to break it. We're going to go higher. That's just a technical fact. So if we break all-time highs, what would be the next target? Well, 505 seems prudent if Mark Newton's viewpoint is 505. So just to put that on paper, that's a 100% rally. In 2023, we had two 100% rallies. So this is not, I'm not suggesting that, we're going to do anything crazy. This is these are 30% moves individually for each wave. The one going to 300, the one going to all-time highs at 415, and then the one going into 500. These are
Right.
all 30% moves. That happens in a month for Tesla.
True.
So
Yeah,
All right.
FOMO is very powerful.
Let's move more quickly. Show us more of these analysis.
yeah, so on the next slide, I just want to show again, this is not a straight line up, and it gets pretty nasty, right? It gets really
Yeah.
nasty, in fact. So even during this incredible breakout, you had 6 violent drawdowns of 20 to 60% over the
Wow.
course of 2 years, with
Mhm.
several handful of 10% drops in between,
Mhm.
right? The average major correction came about every 4 months, right?
Mhm.
And then the duration was anywhere from 3 to 5 weeks. So again, if you're kind of like, a trader, or you're thinking about, how to manage the uptrend, as I call it, it's going to be really important to not get back in too quickly when you're trying to buy the dip. And so some of the key indicators that are going to be really important to use are the ones that are going to help you identify reversals and trend. Because when we break trend, when we break an uptrend, we're heading down. And when we head down, if history is any guide, we should expect pretty violent swings to the downside as well. So that's where a lot of people really mess up. They put on too many trades, they trade too frequently, and then all of a sudden, if you guys follow Squawk Square, for example, he buys in on the first dip that comes about because he sells every time it goes up 1%. So if you're going to be trying to do that, I don't think that's going to be the right strategy. If you're thinking about the breakout in 2025, and not to mention if you're doing options, it's even amplified. It's more amplified. You want to be able to, you really want to be careful during the pullbacks and being too exposed. And then on the same token, you want as much upside, exposure when we do have these breakout periods. And so as you guys probably even noticed, I mean, I saw it a lot in the private group that I have. A lot of people, during the July breakout had a really hard time because some were taking profits along the way, which is good, right? But the hard part about it is that after you take profits, you need to figure out when do you get back in. And when the stock is going up day after day, you start to, feel a lot of emotions, and you start to do things, the worst things at the worst times, right? So you're like, dang it, it's gone up 4 days in a row. I got to buy it because, we can probably go higher. And then all of a sudden we go into a 3 to 5 week pullback, right? So, these are things that I, have just been, this last 2 months, I really took time to really sit down, study, and make sure that I have the right indicators that's going to give me the best chances, managing the uptrend and trying to avoid, really getting my butt handed to me during the downtrends, right? Because they will come, even amidst a breakout like we saw in 2019 and 2022. They will come.
Yeah. Herbert, do we have time for a quick question?
Mm-hmm.
Justin, how do you manage? So you're saying like manage the uptrend, and I think that's so important because there's so many, especially in 2019, 2020, that have been burned. And like right now, I'm still in this mode of as soon as I see green, I cut it. And I have some kind of ground rules, like you were saying, for don't throw these short-term darts, right? Theta decays greatest 45 days to zero, so definitely go beyond that. So there's slower movers, you make less money, but stop trying to get rich, and hit a grand slam on every single trade. So do you find that you have some lessons that you learned, and you manage your greed, or can you speak to some of these takeaways on managing the uptrend? Because I keep cutting the green, but at some point I need to let the trade play out, and I'm having trouble with that.
Yeah, I think the number one thing that I believe is that the people that were conditioned to trade Tesla over the past 2 years are not going to make it in 2025 going onward. The reason why is because you're so conditioned to selling the rips, right? Because in 2022, for 2.5 years, we continually made new lower lows, right, and lower highs. And it's just this constant folding over of rallies that has taken place. And so what that does is that trains people to A, feel anxious, and B, to have their expectations very low, so that whenever they do get a win, they're just going to bag it. But if we're right about what's coming, then at some point that strategy is not going to work, right? It's a very defensive strategy. What instead I believe is that you want long-term exposure and you want to sit on your hands. That's going to be the winning strategy, is just doing a lot less. I think doing too many trades, each day, for example, I mean, it creates a lot of anxiety. And I think ultimately you're just going to have a much better time if you're, doing longer term exposure. So for me, I like to think about like multi-week or multi-month trades. Day-to-day trades is very difficult to do, during a big breakout. If you look at NVIDIA's chart, for example, this is one thing I like to say is that, if you look at NVIDIA's chart and you are selling covered calls, go and look what happens when they broke out of their bear market. You probably could have made money 4 times in 18 months. The rest of the times you would have sold your shares at the very bottom and missed the entire run upwards. So I think something similar will happen with Tesla.
Can you show us that then? Let's go to 2025 breakout.
Yeah, so really quick, this is just a seasonality chart by seasonality_AI. Great account, you guys should follow. But this just shows how Tesla typically performs in any given month over all years it's traded. So this is looking at the last 11 years or so of data.
Mm-hmm.
Um, and so what you'll notice is that late May into August, or even arguably all the way up until September, tends to be very bullish for Tesla, right? And we also have this initial pop between January and late February, right? And then we had this weak period going into tax season, right? And Q1, which is also a seasonally weak time for Tesla. But we really picked things up. So again, if you're thinking about how to manage the uptrend and maybe which months to be bullish, which months to be a little bit, cautious, seasonality will help you, determine that. And the next few slides, we can even just jump through really quickly. It's really looking at the kind of like, this is the monthly view. So again, just look at the win rate for each month, which
Mm-hmm.
coincides with the chart previously. It shows, for example, June is a really great month for Tesla on average. Now,
Mm-hmm.
seasonality is not always to be trusted, right? Because sometimes it's wrong.
Yep.
But it gives you some general fidelity into, how it may perform. So it's good to keep in mind at minimum. And this is also comparing, S&P seasonality with Tesla. The S&P is that very small line. I actually have a better chart in the next slide that we can get to, but you want to be able to almost coincide the two because Tesla typically follows the indexes. And I guess we can jump into the next slide because this one's kind of hard to see, but I have it blown up a little bit later on. This shows Tesla's seasonality on an election year basis. So once every 4 years, basically, it shows one of these colors. And the blue one is the post-election year. And now there's a very little data, right? Because we're just looking at basically 2 years worth of data because it happens once every 4 years. But the blue data also kind of gives you a little bit more insight into how Tesla may perform next year. And I've kind of summarized it with those yellow arrows. It looks terrible. I'm sorry. But it at least shows kind of like the general direction month over month. And, again, June into October should be a really strong time for Tesla.
Yeah.
Yeah.
Okay.
And then in the next slide, it shows, what the S&P looks like on a post-election year basis as well, which is the blue chart on the left side on the bottom. That's the S&P. And you can see it's basically a straight line up. So typically post-election years tend to be really good for the markets. And you couple that with Fed easing cycle starting. This is what I mean by tailwinds. If you're going to be risk on at some point for Tesla, I would say, at least for me, this is how I view it. I think the time is going to be over this chapter because there's so many tailwinds going into it and, capability to surprise to the upside. And I think that might be it for slides. I think I might have one more. Yeah. This one just looks at the bear market and the fact that if you were conditioned during this time period, again, lower highs and lower lows, right? You got trained to really sell those rips. And I don't think that strategy is going to work in the next chapter ahead because I believe we'll change market structure into higher highs and higher lows. And that'll make it really difficult to, essentially get back into the stock once we really start breaking out.
Okay. This was very powerful. I think I've learned a lot. And what I liked about today was it wasn't just purely technical. You kind of, combined it, right? There's fundamentals, there is stories, there is potential catalyst, and then there is election year, there's the economy, and then there is, so you got, what could happen with Tesla, what can happen with the economy and the post-election year, and then you've got the technicals that kind of show you what levels could it possibly go, and you compare it to what happened in the past, which obviously is, who knows what will happen. We, no one here knows what's going to happen in the future. None of us can predict that. But any little thing like this is helpful. I'm a buy and hold, so it doesn't really matter to me, any of this. But as I said at the very beginning, that it's still important for me as a buy and hold long-term investor to understand what could happen because Tesla's so volatile. It is one of the most volatile stocks that's out there. And so stock's going to skyrocket, stock's going to fall down, and you need to just kind of understand a little bit of why it's doing that. It's always done that. Number one, just use that as just knowing that it's just the normal thing of a very volatile disruptive innovation company. So thank you both very
Exactly.
much for that.
And
Yeah.
like you, I mean, my goal is to, of course, do long-term shares and then sell covered calls in the future. So the only reason why I started dabbling in technical analysis is to help give a little bit more fidelity into understanding momentum and overbought condition or extreme conditions in general. And also because I've noticed so many times that, Tesla will start to break out and then the indexes are folding over and you're like, what the heck? And then now Tesla's selling off and you just get
Yeah.
blindsided. So,
Yeah.
at minimum, it helps to give a little bit more context into what's happening. But I agree with you. Buy and hold is, that's just the simplest and best way over long periods of time to do this. But I know a lot of people that trade around their core holdings. And so, they might put on 5% of their portfolio to options, for example, and just want to be able to trade opportunistically. So that's
Well,
where
one
that
of
kind
those
of comes in.
people that's done really well is Xander. And so I wanted to show that the dude, Xander, you've been knocking out of the park in the last 6 months every single day. Here's your proof, right? There's a track record here. Last 90 days, you're just trying to show, and I know it's going a little too fast here. I guess all that matters is that
No,
you see that you've been sort of showing that you've somehow figured out, you understand Tesla's. I mean, we know that Tesla is driven by algorithms. There's a lot of like institutional, just automatic trading, and you figured it out how that's working. And so you've somehow learned how to do that, right?
Yeah, I'd say I put together exactly what Justin was saying regarding, being able to sell some covered calls was my goal, was to monetize the position that I was holding, the long-term position. Instead of just watching it day over day fall, I needed something to be green. So I started selling covered calls, and it led me to selling covered calls intraday. I don't have a 9 to 5, so being able to sell covered calls intraday, there's music. That's why I'm like messing around with the up down on there. You could find that on my highlights page. But timing the selling of the covered calls, I realized that I could be a day trader, but instead of being the gambler in the casino buying these call contracts where 8 or 9 out of 10 expire worthless, I could be on the opposite side. I could be, most of the time it'll work in my favor, especially while the stock is downtrending. So, and that's evolved. Like what that video there specifically actually is all of the above: buying calls, selling calls, buying puts, selling puts. Right? When you sell a put, you're betting that the price is going to go up. So it's actually like a limit order. It's a bullish thing to do. Selling covered calls, you think the price is going to go down. You want to understand these things. There's YouTubers that I'll recommend. Like my favorite is In the Money, macro, whatever his name. Like there's so many, but that one made it simple. I'm a dummy. I'm a college dropout, so I like simple language. Explain it to me without the big words. We see MACD, but what does it mean? Right? Most of us learn by seeing some kind of pattern. So finding that that success for 3 months, that's from that's 128 trades, 118 of them were profitable. I don't actually care about the money. What I care about is the success rate, because now if you can continue to have that success rate by dodging the big sell-offs, like last week, I made money the whole way down because I had some covered calls or I sold my shares. So it just kind of depends. Me having buckets, this is my trading account. This is my Roth IRA. I can't add more money to this except but once a year. So if I lose money there, that's not good. So having the long-term portfolio, which I have, I don't do anything in there. Justin, are you still selling covered calls? Or I imagine no, right? Yeah.
No, I'm not selling covered calls maybe until 2026.
Yeah. So having overnight risk with these longer duration long darts in covered calls it's what we want to do. But what Justin is saying is if this rips, and we really don't know when the market will give Tesla the credit, and when we get enough data. So when it rips, I just do not feel comfortable. That's why I have so many trades. I needed to figure out how to become an active trader and put it all together, put the technical analysis of I trade on the 1, 3, and the 5 minute, and that's so specific. instead of picking up 10 cents on a covered call for 1 week out, I could pick it up intraday with a closer. But now the intraday, I can see that the high of the day is established. We've been higher, low, higher, lower high, lower low. It's downtrending. So then I start getting confidence and I gamble. But by the end of the day, no matter what it is, I'm closing it. And so like that discipline of knowing when to, I call it a fire drill. When we talked last week, I just sold everything on Wednesday. And when we talked, I was like, yeah, I don't feel comfortable here because it seemed like it lost its steam. Like buyers weren't coming in and sellers were starting to step up. And so like that sentiment and understanding the psychology about what's happening is what's helped me become a better trader. I know it's like a lot to digest. Everything that we hear and we're taught about options, in my opinion, is people needing to make commissions, and with all due respect to them, if you don't know what you're doing, go to someone who knows what they're doing and obviously validate them, and trust a money manager versus trying to be gambly. I have guys in my private options group that are very, very intelligent, but they haven't felt the pain that we've felt, especially if you're in 2019 and you wrote it from 400 down to 100. I have so many life lessons. I wrote an article, the only article I wrote. It's pinned to, well, actually, I think I changed it, but it's in the highlights and it'll be pinned to my profile. But you can click on articles on the profile. Read it. Understand. I'm not actually telling people to do options. It's an opportunity to kind of juice the portfolio on the way up. Managing greed is by far the most important lesson I learned. And I think about our buddy Christian, right, from the Cyberbulls, and how he taught me this lesson of when you're a young buck and you can just lose it all and start over. But then at some point you start getting to a larger size portfolio, and now it's really about portfolio management and thinking about retirement. And so the risk, the risk appetite is changing. And so I think we all need to ask ourselves, what is our time horizon? What is our risk appetite? What are we trying to accomplish here? I'm not trying to get rich off of one shot, and I'm actually thinking about like long term. What happens if I, instead of a contract or two, what if it's 20 or 200 contracts? And obviously there's issues that come up the larger you are. But like if that is what I've been focusing on over the last 6 months, and I hope the success continues. But really, it's just like, don't think about how much money you could gain first. Think about how much money you could lose, and if you still want to do it, then hopefully you did your homework and you're holding up the right weather vane to gauge which direction it's going. So I'll leave it with that.
Thank you both very much. So, first of all, nothing today is financial advice. I really asked these guys to share me what they were thinking. They could be completely wrong, and they were pretty forthcoming about that. Much of this guesses, probabilities, who knows? But we all have different investing styles. I'm a buy and hold. That's the way I think of it. But I still think it's important for me to look and learn what you guys are saying. If you're interested in options, go check out Xander. Go to his X account at R6Alex. And he shares a little bit of how he thinks about what he's doing. These are short term, as you heard him just right now, day by day. If you're interested in learning more about trends and how stocks move, and you just saw his presentation today, follow Justin at SMD Capital 88. And then if you want, he's actually even has a private group, and he shares a lot of details there. And you can follow along with the group to kind of see the thinking about what might happen. And the reason I brought them both here is that their track record has been pretty impressive in the last 6 months to a year. So I kind of have a feeling that they kind of know something a little bit more than most other people. So hopefully you found this to be useful. I appreciate you, Justin and Xander, for coming on. Thank you guys very much.
Thanks for having me.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.